1:05, and the meeting comes to order. Today we have 4 different bills to hear. We have several different testifiers on these 4 bills, so we're gonna ask each testifier to hold your testimony for 3 minutes. So with that said, the first bill up is Senator Pratt, Senate File 2991. Senator Housley moves at Senate File 2991 be heard, passed, and re-referred to the floor to general orders. Senator Pratt, to your bill.
Thank you, Mr. Chair. Several years ago, we passed legislation that ensured that manufacturers' reps, when dealing with manufacturers, would be governed by Minnesota law. And what this bill does is simply close what we see as a loophole in that law to assure our Minnesota reps are being overseen by our state laws. And what it does, Mr. Chair, is it simply says that not only must the manufacturer's rep and the manufacturer follow Minnesota law, but that the hearing must occur in the state of Minnesota. So we're just tightening that up. And Mr. Chair, I'll let my testifier go and answer any questions.
Mr. Hoff, welcome to the Commerce Committee. And if you're ready, if you'd like to go ahead with your testimony.
Thank you, Chair. My name is Gene Hoff. I'm an attorney, and I'm working with the Manufacturers Agents National Association. And Senator Pratt is right. He pretty much hit it on the head. We're trying to close a loophole, which is good. We're trying to close a loophole that will prevent an out-of-state manufacturer who owes a Minnesota small business manufacturer's representative to go to that foreign state to essentially get paid what it's owed. We did an amendment back in 2014 that provided the choice of law provisions were void, and this just closes the loophole to prevent out-state manufacturers reps from forcing the Minnesota rep to go out of state.
Thank you, Mr. Hoff. Members, any questions for Senator Pratt or for the testifier on Senate File 2991? Any questions, members? Any comments or other discussion? Seeing none, Senator Pratt, final comments on your bill?
Well, thank you, Mr. Chair, and I want to thank my co-author, Senator Latz, on this. We passed it with a unanimous vote a few years ago, and members, this won't affect Minnesota companies working with Minnesota sales reps. They're already following the state law. This just assures that in that contract, they won't agree to follow Minnesota law, but have a choice of venue which could be out of state. So thank you, members.
Well, thank you, Senator Pratt. Senator Housley renews her motion that Senate File 2991 be passed and referred to the general orders. All those in favor signify by saying aye. Aye. Opposed, nay. Motion carries.
Thank you.
Thank you, Senator Pratt. The next bill, we're going to drop down to Senate File 2543. And Bruce and Rich, if you would like to come to the table. And members, I'm going to do my two bills from the chair's spot today. So Senate File 2543, I do move that be passed and referred to general orders. That is a bill that deals with self-insurance for cooperatives, and what we ran into a couple of years ago is the way the co-ops currently have to show funding or show resources to support their self-insurance clause is that it has to be in the cash flow. This bill changes that so that they could also use the net worth or capital holdings. And so in this case, the cash flow was down, but they had about 17 million bushels of grain that there were no attachments to them. So with that said, I'm going to turn it over to Mr. Clavin.
Okay, thank you, Mr. Chairman. For the record, Bruce Clavin, I represent Parthenon Agency on this issue. And I think for the benefit of the members, Mr. Chairman, Rich can walk you through the issue, and then I can tell you about the bill.
I'm going to not get that right, so I'm going to say Mr. Rich.
So
If you would pronounce
Senator.
your name and who you represent, and then go ahead and testify.
My name is Rich Sobel-Varro. I am the CEO and General Counsel of Parthenon Agency. Parthenon Agency is a risk management agency owned by over 3 dozen Minnesota ag co-ops. 11 of those co-ops have elected to become self-insured for auto liability under 65B.48. The regulations promulgated to approve someone for self-insured status date all the way back to 1985, and they include some terminology that is currently not within the general accepted accounting principles. The Department of Commerce now uses a statement of cash flow to determine whether a co-op or any business qualifies. Cooperatives, in the example Senator Dahms was referring to, it was a cooperative by the name of Central Region Co-op, and they were a great example because of the timing of their fiscal year. Their fiscal year is August 1st, July 31. They purchase a substantial amount of grain in the fall, and then they, quote, capture the carry, which means they hang on to that grain until the end of the following summer. So while they had negative cash flow because of commodity prices, they nonetheless had $16.4 million in working capital. So they were negative cash flow for that year, fell out of compliance with the statute, but had $16.4 million in working cap. So the general accepted analogy is, or analysis is, that the best measure of liquidity, in other words, your ability to pay your bills, is your working cap. So while they had $1 million in self-insured authority and $9 million in excess casualty coverage above that primary layer of coverage, they were no longer within the regulations requirements. So the situation that occurred with Central Region Co-op, which is out of Sleepy Eye and within Senator Dahms' district, could occur with any co-op because co-ops are highly seasonal in their purchasing. I had a very similar issue happen with the Federal Motor Carrier Safety Administration, where a co-op that was self-insured with them had spent a tremendous amount of cash on spring ag inputs. And the FMCSA was about to invalidate their self-insured authority until we pointed out that that cash had all been converted to assets and it showed up as inventory on their balance sheet. So this essentially corrects a problem that is entirely possible for any co-op in the state of Minnesota to have that elects to move to self-insured status. By simply including the multiplier of their self-insured authority, that way the Department of Commerce and this body are assured that that entity has the ability to pay those claims should they occur. So that's why the bill includes that 3 times multiplier of their authority. The Department of Commerce is advised of their authority. It's specifically included when you fill out your application. In the application for self-insured authority, question number 16 asks you to identify the amount of excess policies you carry. You naturally have to identify what your primary layer is if you're going to tell them what your excess is. Simply telling them excess without knowing where that attachment point would be meaningless.
Well, thank you, Rich. Bruce, anything you want to add?
Sure, thank you, Mr. Chairman. Bruce Clavin again, for the benefit of the members. Last year, we tried a couple of amendments on this issue. If you remember, the reviser was backed up 7 or 8 weeks last year, so we didn't get around to the point of doing jackets. And we tried an amendment at an evening hearing in March about this time to the department's policy bill, and it would have amended the rules. That was our original proposal, to direct the commissioner to amend rules to address this cash flow situation. The department had concerns with that last year. So we went ahead and got jackets on, put the bill out during the interim. Senator Dahms and Representative Torkelson introduced it in May, so it would be out for the interim for discussion. And that's what you have before you. So instead of monkeying with all the rules on net cash flow, we simply, on line 1.19, said the commissioner may not cancel the insurance. That way, you still submit the cash flow statement or negative funds flow, but if you have that and you have 3 times the amount of working capital, they can't cancel your insurance, and that addresses our specific narrow issue.
Members, really further testify. Anybody from the department want to testify on this? Other testifiers? Seeing none, members, any questions? Any questions? Seeing no questions, I will renew my motion that Senate File 2543 be passed and referred to general orders. All those in favor signify by saying aye. Aye. Opposed, nay. Motion carried.
Thank you, Mr. Chair and members.
Thank you. start on Senate file, we'll go to Senate file 3287. Give Senator Upke 2 minutes. I know he had Bill in another committee today, so he wasn't sure how well that was pronounced. Huh? Short bills. Members, I think we'll go ahead and get started with Bill Senate File 3287. And the Senate File 3287 is an Department Enforcement Powers Modification. And there is an amendment to that bill. And that amendment is he here? Oh. Members, we're going to back up just a minute here. As long as Senator Utke is here, we will withdraw Senate File 3287 from the floor, and we will go ahead. Senator Utke, whenever you're ready. Senator Utke, welcome to the Commerce and Consumer Protection, Finance and Policy Committee. And I understand you had Senate File 2753, which is a peer-to-peer car sharing program establishment. Senator Howe moves that Senate File 2753 be passed and re-referred to civil law. Senator Utke, do you have an amendment?
Thank you, Mr. Chair. Yes, I do. That one's kind of on high the way it sounds up here, but anyhow, I've got the A1 amendment, if you'd like to offer that, or have someone offer it.
Senator Howe offers the A1 amendment. All those in favor signify by saying aye. Aye. Opposed, nay. Motion carries. To the amendment, Senator Utke.
Thank you, Mr. Chair. Members, the bill in front of you today defines and establishes an insurance and regulatory framework for a relatively new service in our ever-changing markets. It's called peer-to-peer car sharing. Much like the Airbnb and the VRBO for personal homes, individuals have begun harnessing the online platforms provided by companies like Avail, Toro, and others to allow consumers to use their personal vehicles and earn some extra money. This service, much like everything in the online world, has taken off faster than state legislators and regulators can keep up. This bill is our effort to address and put in place an insurance and regulatory framework to protect consumers, vehicle owners, and the platforms in the marketplace. It is largely based on a model bill developed by the National Council of Insurance Legislators, known as NCOIL. And with me, Mr. Chair, we've got a list of testifiers, and I think the sheet I just grabbed as I came in here, it looks like first up would be Mr. Franzen.
Mr. Franzen, if you would like to come to the table, and then after Franzen, we'll have Samantha Erickson. So if Samantha, if you want to be ready, I think Samantha's doing it by remote, but Mr. Franzen, please
Good
state your name
afternoon,
for the
Mr. Chair.
record and proceed with your testimony.
My name is Doug Franzen, and I am representing Allstate on behalf of Avail. We fully support this bill as a car-sharing platform. The origins of this bill is an not an NAIC, an NCOIL model that has gone out and been passed in various forms through a number of states. Our bill is not exactly like the NCOIL model, and that's because we've spent quite a bit of time, actually, working with various stakeholders, including the Department of Commerce, who had a very constructive suggestion for us, which I believe was incorporated in the author's amendment. We've been working with the Minnesota Association of Justice for some time. I wish I could report we fully agreed on everything. We still have some public policy differences on the bill. We've talked to the rental car companies and basically anyone else that really has expressed an interest in this legislation. We think it's a good bill. It meets a market need. And Mr. Chair, I'm cognizant of my 3 minutes, so I don't want to get too detailed here. but I'd like to be available for questions. And in short, what it does is it sets up an insurance framework where if you look to line 6.6 on the second page, the platform itself is primarily liable, unless you look at the exceptions. In the real world, the way it would work out is there is an owner, an individual, a married couple, their kid may go away to college, the car is garaged. They have to have insurance. We vet the owners. The driver, anyone through the platform, any licensed driver, can share that car with the owner. And under Minnesota no-fault law, basically everyone follows their own insurance for their first claim. So the driver's insurance would, as a practical matter, be first under this section. But the priority, the best way to think of that, the platform is an umbrella policy, if you will. It's larger than the minimums in Minnesota, and Minnesota has one of the largest minimums in the country. So it requires the insurance, it lays down the time periods for the use of the car when the platform is on or off. It also has a number of restrictions. With that, Mr. Chairman, I will conclude at least my introductory remarks. I suspect there may be questions.
Members, I think we'll go through all the testifiers and then we'll take questions at the end of the testimony. So next we have Samantha Erickson from Turo. Samantha?
Hello, good afternoon, Chair Dahms and members of the committee. My name is Samantha Erickson, and I'm a Senior Government Relations Manager at Turo, and I'm here to express our strong support for SF 2753. Turo is the world's leading peer-to-peer car sharing marketplace that connects vehicle owners with folks in need of a car. Turo's mission is to put the world's 1.5 billion cars to better use by allowing vehicle owners, or hosts as we call them, to share one of their most expensive existing assets, their car, with locals and visitors alike, while earning a little bit of extra income to help cover their car payment, credit card debts, or to save up for unexpected life expenses like medical bills. For example, today you can read written testimony submitted by Allison Matthews, a Turo host, resident of Prior Lake, Minnesota, and mom of 3, who shares a family car a few days a month with the hopes of using the earnings to pay off the car loan by the time her oldest daughter turns 16 and receives her driver's license. Turo guests enjoy unprecedented selection and the ability to choose the exact make and model for their needs while putting dollars directly into the pocket of a local Minnesotan like Allison. The bill is based on the Peer-to-Peer Car Sharing Program Model Act with Minnesota-specific additions and has been adopted by the National Council of Insurance Legislators, supported by APCIA, NAMIC, and the peer-to-peer car sharing community. It has been enacted in over a dozen states. The bill recognizes peer-to-peer car sharing as its own distinct industry, while clearly defining the obligations and responsibilities of all parties involved in a peer-to-peer transaction through a sensible insurance framework. The definitional clarity and insurance requirements ensure that there is coverage during all times of the car sharing period with no opportunity for gaps. I'm here today with Turo's Associate General Counsel, Sean Vink, who will provide an overview of the bill and will be able to answer any questions that you might have. And with that, on behalf of Turo and Minnesota's community of peer-to-peer car sharing hosts and guests, thank you for your time and consideration of SF 2753, and we respectfully ask for your support.
Thank you, Samantha. Next we have Sean Vink from Turo. Sean, are you with us?
Yes, sir.
Go ahead, state your name and who you represent and continue with your testimony.
Thank you, Mr. Chairman. My name is Sean Vink. I'm Associate General Counsel at Turo. Thank you for the opportunity to speak with you today. At the risk of recapitulating some of what my colleagues have said, I'll just give a brief overview of the legislation and of course be available for any questions. As was mentioned, the bill is based on a National Conference of Insurance Legislators model framework with Minnesota-specific modifications. And the way I think about it is that it really addresses 3 basic priorities: insurance, consumer protection, public safety. As was mentioned, it makes sure that for the full duration of the sharing period, there's coverage in place to cover the liability of the driver. We also address the liability of an owner during a car sharing transaction, and the bill requires that the platforms assume the liability of the owner. So it takes a very comprehensive approach in protecting both owners and drivers and third parties in any accident. It addresses consumer protection by making sure that there's a standard set of robust disclosures and other features that every platform would have to follow. Make sure that customers understand what the risks are, what the coverages provide and what they don't provide. And then it addresses public safety, and it does that in a couple of ways, but the most prominent of which is it requires platforms and owners to make sure that no vehicles are shared when there is an outstanding unaddressed vehicle safety recall. So it's an attempt to make sure that the public safety is protected. There are other aspects of the bill. As was mentioned, it tries to make clear definitional distinctions between peer-to-peer and other industries, and we think that that's one of its core attributes. And we think that it does a pretty good job. As was mentioned, there are some modifications that have been incorporated in the bill based on discussions with other stakeholders, including the Minnesota Department of Commerce. And so with that, I will say thank you for the opportunity to speak, and I'm happy to answer any questions.
Thank you, Sean. Next, we'll go to Todd Hill, and I think Todd's representing Enterprise, and I believe Todd is going to join us remotely. Hello, Todd, and if you would like to state your name and who you represent and proceed.
Thank you, Chair Dahms and members. For the record, my name is Todd Hill with Hill Capital Strategies, and I'm here representing Enterprise Holdings. I do have Ozzie Santos and Steve Hari available as well to answer any questions. Ozzie is the general manager based here in Minnesota, responsible for the enterprise operations, and Steve Hari is the controller. As it was mentioned, there are a lot of good provisions in this bill and a lot of provisions that we support. We were part of the negotiations at NCOIL to put together a regulatory framework that would deal with these peer-to-peer car rentals. And we agree this bill helps ensure public safety, it ensures consumer protection, and it deals with the insurance issues. However, this bill varies greatly from the NCOIL model in that it also exempts peer-to-peer transactions from up to 26% of the taxes rental car companies collect here in the state of Minnesota. And with that in mind, we have to oppose this bill. There are hundreds of rental car entities in the state of Minnesota beyond Enterprise Rent-A-Car or Hertz or Avis. There's numerous body shops and auto dealers that also rent cars. And every one of those rentals is subject to a very high rental car tax rate in the state of Minnesota. In fact, we're the third highest rental car taxed state in the nation. But as I understand Section 9 of this bill, these transactions will not be, they will collect the state sales tax, but beyond that, these transactions would be exempt from the local option sales taxes that have been enacted. They would be exempt from the 9.2% special rental car tax, which was originally put in place as a temporary tax in the 90s to finance the Super Bowl. That tax goes to help support the Corridors of Commerce program at the Department of Transportation. They would be exempt from the 5% registration fee, which is all used to fund roads and bridges in the state of Minnesota. And as the way this bill is drafted, we believe that they would also be exempt from collecting the concession fee at the Minneapolis airport, which is 11.11%. And so we really feel that the legislature has for many years tried to ensure and protect brick and mortar businesses in the state of Minnesota. Enterprise itself, prior to COVID, employed 1,000 people at more than 60 locations across the state. We think that this bill provides an enormous tax advantage to a competitor. We're not afraid of competition. We're willing to compete, but we just cannot support a bill that gives an enormous tax break to the customers and the renters of these products. And so with that, we oppose the bill. We hope that we can continue to work with Senator Utke and try to come up with some resolution around the tax part of this bill, because there are other many very, very good provisions in this legislation, but with that tax break that is included, we have to oppose the bill today. With that, I would stand for any questions.
Well, thank you, Mr. Hill, and if you would hang on, stay around, so when we get to the question part, if there's questions, I certainly call on you if we need you to be in that question. Next, we have Mr. Joel Carlson. Joel, if you would go to the testifier's table, I'd appreciate it. welcome to the committee, Joel. If you would state your name and who you represent, and then proceed with your testimony.
Thank you, Mr. Chairman and members. I'm Joel Carlson. I own a legal research and government affairs business here in St. Paul, and I'm here on behalf of the Minnesota Association for Justice, and it is a pleasure to be back in front of you live once again. Mr. Chairman, like others, we would like to see some regulation put in place as it relates to the peer-to-peer rental car space. And we've had several meetings with Mr. Franzen and Mr. Sheehan about this, and I have told them that I'm very much in favor of the title of the bill. And beyond that, I think I have something highlighted in almost every single section of the bill. You know, there are significant issues in here as it relates to whose coverage is primary, limits of liability coverage, vicarious liability, the definition of a rental car company, which Mr. Hill just spoke about. I've got two attorneys here from our association to testify about the bill, and for interest of time, Mr. Chairman, I think I'll let you call on them, and then if there are questions when we're done, we're happy to answer them. We would like to see something happen in this area. This isn't the appropriate form right now in the form it's in, and we expressed that to Senator Utke as well, and we'd like to continue to work on this to get something in place that is protective of consumers. Our association represents the people who are injured in automobile accidents, of which, according to the Department of Public Safety, there are about 101,000 automobile accidents every year in Minnesota, involving about 117,000 vehicles, and there are over 20,000 serious injuries in those. Those are the people we represent, and that's what our interest is in making sure this gets done right. Thank you, Mr. Chair.
Well, thank you, Mr. Carlson, and next we have Matt Barber. Mr. Barber, if you please come to the testifying table. And if you would state your name and who you represent and proceed with your testimony.
Good afternoon, Mr. Chair. I'm Matt Barber. I'm an attorney in Minneapolis, and I'm here on behalf of the Minnesota Association for Justice. And like Mr. Carlson said, we've got some issues with this bill. The main ones are that there is a limit for what peer-to-peer is required to have for insurance, but it's just too low because the circumstances of when people rent cars in the state of Minnesota are for big family get-togethers, and we'll talk a little bit about the facts of a case that show just how low the minimum is and why we need a much higher limit under this framework. The framework also allows peer-to-peer coverage to be excluded for reasons that an innocent third party has no part of. And that's another issue we have with this bill. And then the last part is, you know, Minnesotans should have the freedom to protect themselves. They should be able to buy insurance that is in addition to what the peer-to-peer group would be required to have. And there are exclusions in this bill that don't allow Minnesota families that freedom. The facts of a case that we have that happened here in Minnesota are pretty tragic. It was the summer, July of 2021, and a family's got a cabin in Cleveland, Minnesota. And they were flying in from out of town to go to their family cabin down there. And it was 7 folks who were coming up here to enjoy the great Minnesota summer. It was a family. It was the St. John's family and the Emerson family. Mr. St. John, along with his wife and 2 kids, and then an aunt and her 2 children. They all rented this Ford Expedition, and they were going to drive it from the airport to the family cabin to get together with their family. There was a collision, and what happened was devastating. Mrs. St. John, mother of 2, passed away as a result of that crash. Her daughter also passed away as a result of that crash, and her son had to be airlifted because he had a fractured pelvis. The aunt had a closed head injury, her son passed away, and her other son had internal hemorrhaging. And under the bill as it's written, the peer-to-peer group would only be responsible for $60,000 in a crash that devastating. And that's one of the main problems we have with this bill is when people get cars here in Minnesota, they're gonna go to their cabins in the summer, they're gonna go to the lake in the summer, they're gonna have their families together. And when you have a crash that devastating, you need to have insurance to cover a risk like that. I'm going to leave any more for questions, but those are just my introductory highlights.
Well, thank you, Matt. And if Mr. Jed Connick would like to come up. Welcome to the Commerce Committee, and if you would like to go ahead and state your name, Jed, and who you represent, proceed with testimony, we would appreciate it.
Thank you, Mr. Chairman. Jed Cronick, I'm an attorney in Mankato, and I'm here on behalf of the Minnesota Association for Justice also. I represent the other individual involved in that crash, the other vehicle that was involved. He's a 42-year-old father of two, and he works 2 jobs to provide for his family. And after these vehicles collided at this intersection in southern Minnesota, they both rolled over. My client sustained severe orthopedic injuries essentially to every part of his body. He was hospitalized in Mankato for 19 days and then spent another 43 days in a rehab facility in the Twin Cities. His medical bills are approximately $650,000 to date. He continues to be engaged in physical therapy. He just recently went back to work in light duty position. They're not sure if he's ever gonna be able to go back to his regular position. And as Mr. Barber touched on, we agree that there needs to be some legislation for these peer-to-peer vehicle sharing platforms, but it needs to make sense for all Minnesotans, and as written, it just doesn't. As Mr. Barber identified, the liability limits called for are inadequate. Again, in this crash, this horrific situation involving 3 families, Mr. Barber's 2 and my 1, this bill would provide for, again, $60,000 in coverage to cover all of those losses, including my clients. It's just not enough. I believe that New York has a statute that regulates these companies and provides for the peer-to-peer platform to be primary for liability coverage, and I believe provides for $1.2 million in minimum coverage for these platforms. Honestly, that sounds like a lot of money. In our crash, that still would not fully compensate these families for the loss. What's good about that situation, in my opinion, with the peer-to-peer platform being primary is, one, it provides the first clear source of recovery in a crash where these families can go to. Without that, it creates a situation where the insurance companies are immediately battling each other for who should provide primary coverage. And then the injured Minnesotan or their families are left to fight everyone to try to get a fair recovery for their families. And the other major issue I see with this bill is it allows for exclusions to be written into either the owner of the shared vehicle or the driver of the shared vehicle. And that is a situation that's present in our case. The at-fault driver's carrier is asserting exclusions in that policy and saying that there is no coverage for this crash in that liability policy. So if we allow for the insurers to write exclusions for vehicle sharing programs, it's just gonna lead us back to the situation where there's not adequate coverage. In my opinion, insuring drivers when they're behind the wheel of a peer-to-peer vehicle is no different than insuring drivers when they're behind the wheel of their own vehicle. So it does not increase the risk or the exposure for the insurance companies at all, any more than it would be when they're insuring the vehicle that's named on the policy. So I believe allowing for the exclusions may be the most troubling aspect, because it provides a situation where, especially if the peer-to-peer platform is not primary, that could lead to a situation where there is absolutely no coverage. Now, I understand the bill as written would provide state minimum coverage, 30/60. Again, most crashes, that's not gonna be adequate. And most of us driving in Minnesota aren't purchasing state minimum coverage. So we would be allowing the peer-to-peer platforms to provide minimum coverage. That's more than I would bet most of us in this room carry on our own policies. And I will reserve any further comments for questions.
Well, thank you, Mr. Koenig. And next we have Ms. Amber Backus from MADA. Amber, welcome to the Commerce Committee, and if you would state your name and who you represent and proceed with your testimony, we would appreciate it. Welcome, Amber.
Great. Thank you so much, Mr. Chair and members. My name is Amber Backus. I'm Vice President of Public Affairs with the Minnesota Automobile Dealers Association. We represent 350 franchise new car dealers across the state that directly employ over 20,000 Minnesotans and contribute almost $1 billion to the state's transportation revenues. And just like the rental car companies, we are opposed to Section 9 of the bill, which exempts peer-to-peer car sharing programs from both the 9.2% rental tax and the 5% rental fee. Some of our dealers have rental car fleets, as you've already heard, so these exemptions give the peer-to-peer car sharing programs a competitive advantage, as their customers would be able to pay over 20% less for a rental. And most of our dealers also have loaner vehicles they provide customers when their own vehicles are in the shop being serviced. While these are not considered traditional rentals, state law also requires the customer to pay the 9.2% rental tax and the 5% rental fee in those situations. So although these are called peer-to-peer car sharing, these programs are offering essentially the same service as rental car companies and dealers who loan vehicles and should be treated the same for tax purposes. Lastly, it would be short-sighted fiscally to give peer-to-peer car sharing programs this tax break. If they take market share away from traditional rental companies and dealers due to their financial advantage, the state's transportation coffers will suffer. Currently, 100% of the rental car tax is statutorily dedicated to the Highway User Tax Distribution Fund, which supports state and local roads. As you and your peers continue to look for ways to add to the state's transportation revenues, we shouldn't institute policies that have the potential to erode them. If the point of this bill is to set up an insurance framework, as Mr. Franson testified to, we'd ask you to focus on that and delete Section 9 from the bill. Thank you very much.
Thank you, Ms. Backus. Members, is there anybody else in the audience here that would like to testify? Any other testifiers? Seeing none, members, we'll open up for questions. Members, any questions? Members, any questions? Seeing no questions, Senator Utke, would you like to make your final comments on the bill?
Thank you, Mr. Chair, and I've got a question for you because I don't have, is this scheduled for civil law next?
This is scheduled to go to civil law next, yes.
Okay, thank you. And Mr. Chair, we've heard from a lot of different people here today that they've got a few concerns, and we realize that coming in, that we've got a few more things to iron out and get ready, and we would just appreciate your support here today so that we can continue to work on this and move it forward to our next stop and, you know, have some possible amendments or whatever we need to do to adjust to bring people together on this and make it a usable piece of legislation. We've heard the importance of it, what it can do for everybody from the consumer to the car owner, and everybody in general on this, and some oversight is definitely needed, and that's what we're here to do. So with that, Mr. Chair, I appreciate your time here today and look forward to the next step with this bill.
Well, thank you, Senator Utke, and as you've alluded to, there are some differences here that probably need to continue to work on, so I appreciate your willingness to do that. And so Senator Howe renews his motion that Senate File 2753 be moved and re-referred to civil law. All those in favor signify by saying aye. Aye. Opposed, nay. No. Motion carries. Members, that concludes Senate File 2753. We will now go to Senate File 3287. And 3287 it's the Department of Enforcement Powers modification. And so there is an amendment to that bill, and I would like to go through that amendment. It is a delete all amendment. So members, I would move that the DE amendment, and that amendment number is, it's the A2 amendment. I'll move that amendment. All those in favor signify by saying aye. Opposed, nay. The amendment carries. Let me go over a little bit the summary of that amendment. The amendment reflects negotiations with the Department of Commerce thus far. It does not represent an agreement with the Department of Commerce. Section 1 caps fines at $25,000 per year for the same or similar unintentional insurance company errors. Section number 2 limits the Department of Commerce's ability to retroactively enforce violations that occurred more than 6 years prior to the enforcement action. For instance, policies that are enforced for a longer period of time where the violation not be discovered until years later, such as life and long-term care policies. The provision requires that enforcement action be commenced 2 years from the date of the discovery or the violation. Section 3 provides for an examination and provides an examination avenue to challenge market conduct exam invoices outside of the Department of Commerce's Enforcement Division and extends the time by which the companies have to pay market conduct invoices. Section 4, the Department of Commerce is participating in the NAIC multi-state exam. This section prevents the Department of Commerce from simultaneously performing a state exam on the same company for the same issues. Section 5, if the commissioner extends an exam beyond the 18-month information based on material lack of cooperation by the examinee, this section adds a requirement that the commissioner notify the examinee in writing of the specific instances determining the lack of cooperation. Section 6, this section attempts to prevent the commissioner from making new law via constant order or informal resolution. Section 7, this section requires the commissioner to annually report to the legislator regarding the status of the exams as well as related costs incurred. Section 8, this language is intended to prevent the Department of Commerce from imposing civil fines on rates and forms that have been approved or deemed approved by the Department of Commerce. Section 9, this section repeals the ability of the insurance company to waive a scheduling conference and order. That is the amendment, and just wanted to bring up what's prompting some of this is back in, I believe it was 2017, we did pass a bill that was to clean up these market conduct exams. However, there seems to be different ways people have found to get around those, so we're back again today trying to get those cleaned up and make sure that we're on the same page on this. So the Department of Commerce, I see Grace, the commissioner, is here. So Commissioner, would you like to go first or where would you like to, as far as your testimony, you can start right now if you'd like, however you want to do it. So we're going to have Commissioner Arnold come up and testify. Commissioner Arnold, thank you and welcome to the committee. If you would state your name and who you're with, and then proceed with your testimony.
Sure. Good afternoon, Chair Dahms. For the record, my name is Grace Arnold, and I'm the Commissioner of the Department of Commerce. I want to thank you, Chair Dahms, for the amendment reflecting the work of the department and the insurance industry thus far. While we continue to have a few concerns with the bill, we are working together to try to resolve our remaining differences. Before getting into the details of the department's position on the remaining elements of the bill, I think it's helpful to take a step back and talk about what market conduct exams are, how they help insurance consumers, insurance agents, and even insurance companies. On page 182 of the lengthy National Association of Insurance Commissioners Market Regulation Handbook, market conduct exams are defined as follows. A review of an insurer's operations and management conducted to ensure, first, the equitable treatment of policyholders, and second, compliance with applicable statutes and regulations. Exams can include one or more of the following topics: claim handling, policy, rate, and form filings, marketing and sales practices, advertising materials, policyholder service, underwriting and rating, complaint handling, licensing, non-forfeitures, and grievance policies. So to summarize, market conduct exams are a focused look at the work of an insurance company's operations. The outcomes that can result from a well-run market conduct exam for consumers and industry members and the industry can be profound. One of my insurance commissioner colleagues, with whom I don't always agree, only sometimes, is unequivocal in her description of the tool. Market conduct is the most important thing we do. She says it almost every time I see her. Market conduct exams are important because of the size and scope of the insurance industry's impact on everyday life in Minnesota. Some context here is helpful. Our state has 1,550 licensed insurance companies and over 22,000 licensed agents and brokers. That includes 145 domestic insurers. Domestic means that we're the primary financial regulator of the company. Makes us the 10th largest total market in the country. Direct written premiums across all lines have increased 43% over the last decade to just over $48 billion annually. That includes approximately $19 billion in health insurance premiums, $16 billion in life, accident, and health, and $13 billion in property and casualty. To recap, 1,550 companies operating within the state write nearly $50 billion in premiums. So I know the discussions about market conduct, as you alluded to, Chair Dahms, at the legislature predate my time at the department and my time as commissioner. Commerce and the legislature worked together on a bill in 2017 that made changes to the way market conduct exams were done. Since 2018, Commerce has opened 17 new state market conduct exams and have closed 24 exams. We didn't open a single exam in the year 2020. Now, I mentioned earlier that the impacts for consumers from market conduct exams can be significant. In 2017, the Star Tribune reported on abuses within the forced place insurance market. This is coverage that's forced onto borrowers if they let their private coverage expire. So if you let your homeowner's coverage expire, your lender could force the insurance on you. It's not a great name. For example, as reported in the Star Tribune, a Minnesota homeowner's forced place coverage cost $4,185, well above the $1,655 she paid for the privately paced coverage. Commerce settled a market conduct exam looking at the practices of the insurer and an affiliate organization for overcharging Minnesotans related to this type of coverage. The consent order the department and the insurer agreed to was designed to result in refunds to as many as 45,000 Minnesota homeowners, cut rates by over 50%, and was projected to save Minnesota homeowners $40 to $50 million over 10 years. Market conduct exams by insurance regulators in other states have made real impacts too. In 2018, the Rhode Island Health Insurance Department completed a market conduct exam that resulted in reduced insurance barriers to enrollees being able to access mental health coverage. And the insurer put a $5 million fund over 5 years that's been used to build out the state's mental health treatment and early intervention systems. Similarly, in 2019, the Pennsylvania Insurance Department settled with a national carrier for violations of mental health parity laws. This settlement also resulted in reduced barriers to accessing enrollees' mental health coverage and a $1 million civil penalty. That insurer also agreed to spend $800,000 on public outreach and education about mental health and substance abuse for Pennsylvanians. These examples demonstrate how market conduct exams are designed to work. Regulators and insurers agree on changes to business practices that results in a fairer marketplace and increases benefits to consumers. Consumers benefit, but companies benefit too because their business practices are refined and the competitive field is more even. As the previous examples I cited demonstrate, while civil penalties are a tool that can be used, the most meaningful results often come from a mutual agreement to change business practices going forward, to make refunds, or in some cases, public education. Aiming for the best interests of consumers in the industry has been my approach to this issue in my time as commissioner. We've instituted administrative practices like new entry exam entry letters that make portions of the process more standard and transparent. I've met monthly with our legal, enforcement, and insurance teams to review status and discuss issues with ongoing exams. And this year, I've extended this a team process so that exam proposals, charges, and any eventual settlement terms will be brought forward to me with joint concurrence from the enforcement, legal, and insurance teams. I'm also proud that the governor's supplemental budget contains a proposal that it funds additional in-house staff for the market conduct exam team. This budget item will allow us to continue these improvements, as well as improve our billing and administrative processes on a permanent basis. As I've said since I began as Deputy Commissioner in 2019, we might have disagreements, but if we do, my goal is that they're on policy and not process. I recognize that since the changes were made in 2017, there's still work to be done, and that's why, I'll turn now to the bill, we agree with the industry on some of the common sense updates that will improve the processes. This includes making the scheduling conference between the department and the company, that's where the terms of the exam are set out, a permanent feature of every exam, documenting in writing circumstances where the department and the company under exam may disagree. We're also happy that the bill includes a legislative report so that the committee can track market conduct work annually. There are other sections of the bill where we agree with the industry in concept, but we haven't gotten the language quite right, and we'll continue to work on those. One example is we agree with the industry that the department should not be simultaneously examining a company individually and then as part of a multi-state exam, which is something that happens as colleagues with our other state insurance commissioners. We agree in principle and just don't have the language right, and we'll continue working on that. Chair Dahms, I and the department remain quite concerned about the potential for some unintended consequences in this bill. As I mentioned at the top, I'm grateful for the updates that were made in the A2 amendment. And as introduced, 5 of the bill's 12 sections went far beyond the market conduct chapter of law, and now we only have 1 section that's outside of that chapter. We'll continue to work on that. In principle, the department's position that is if the problem we're trying to solve is related to market conduct, then let's fix that in the market conduct sections. So I'd like to highlight a couple of items that I remain concerned about. I'm really alarmed by the bill's attempt to cap penalties by the agency at $25,000. Monetary penalties serve as an important tool in our toolbox to deter similar market conduct action and to create a fair marketplace. We think there's a distinction between a fine that's punitive and one that's a meaningful deterrent, and there would be little to no financial incentive for competitors to change business practices with such a minimal penalty, putting any company that agrees to the terms of the consent order at a competitive disadvantage. As I mentioned earlier, commerce and insurance regulators across the country routinely agree with insurers to resolve market conduct exams with changes to business practices and improvements for policyholders. But providing an ability to cure mistakes should not mean that the insurance company should be immunized from any sort of meaningful consequence if they've broken Minnesota law. Further, the department is unclear on what the definition of willful violation is. Introducing a standard that's not clear risks more confusion and disagreement between the department and a company under exam, and that's the exact issue we're trying to avoid with this bill. So while we are making good progress with the industry, it remains very much a work in progress, and I urge the committee to consider laying this bill over today instead of moving it out of committee. Doing so sends a strong signal that in the long-standing tradition of this committee, the department and industry should and can come to accord. Further, I appreciate that in the conversations I've had with industry, they support increasing the number of in-house market conduct staff at the department. And so laying over the bill today means that once we've gotten the policy right, it can move in conjunction with the governor's budget item that provides the resources to bring those changes to a full reality. So Chair Dahms, I'm happy to stand for questions, and I really look forward to continuing to work with you on this as session moves forward.
Well, thank you, Commissioner Arnold, and if you could remain here, because we'll do the other testifiers, and then we'll come back to questions. So sure. If there are some questions for you at that point, we'd appreciate if you would be willing to answer them then. So again, thank you for your testimony. And next we have Aaron Cocking from the Insurance Federation, and Robin, if you want to come up from the Minnesota Insurance and Financial Security Service. Aaron, if you would introduce yourself and state who you represent and proceed with your testimony.
Mr. Chairman, members of the committee, Aaron Cocking, the President of the Insurance Federation of Minnesota. Mr. Chairman, let me start by saying how much we appreciate the attention that you've given this subject since we passed the first attempted fix in 2017. From our standpoint, this bill is relatively simple in what we are trying to accomplish, and that is giving insurers some due process and some assurance of what they can expect when being subjected to a Minnesota market conduct exam. I want to state at the outset, I want to be incredibly clear at the outset, we have no issues with the department's regulatory purpose in examining insurance companies. We all want insurers operating in Minnesota to be in compliance with properly adopted Minnesota laws and rules. I think the public policy decision around these exams is whether the purpose of a market conduct exam should be to ensure compliance with Minnesota law, or whether the purpose should be to dig for violations in order to level punitive fines. Those two mindsets dramatically alter the direction these exams take. One thing we repeatedly hear from companies is that the process is the punishment. That is to say that the process of these exams dragging on, accruing substantial exam costs of which we pay for, and the threats leveled is often much greater than the end penalty. Section 1 of the bill takes part of that threat away. It also gets at what I mentioned earlier, whether we want compliance or punishment. I want to point out and make perfectly clear, this language doesn't include willful violations of the law. Nobody is defending or trying to shield intentional acts. This language is meant to limit fines or punishments for inadvertent or non-intentional violations. The bill also says that the commissioner should consider whether corrective action was taken for the consumer. Companies that recognize a problem and address it on their own should have that considered in any potential penalty. Section 2 of the bill includes what amounts to a statute of limitations and how far back the exam can look. As we look at other places in law, we see that other criminal and civil cases have statutes of limitation. Fraud, trespass, contracts all have 6-year limits. There's good reasons for these to exist, and we think the same should be the case for how far back these exams can look. During our discussion with the departments, they pointed out that some of these policies with long terms might not be known until much later. We take account of that in the delete all amendment with the new language that says unless the violation arises out of a contract that remains in force. One of the purposes of these statutes of limitation is that it encourages the department to act in a timely manner. The same should be the case in these market conduct exams. I go back to the key theme that I'm repeating again, is the purpose to correct action or to penalize companies. Section 3 is a due process provision for companies. I spoke earlier about the process being the punishment with monthly bills charged to carriers. There is currently no established process in place when there is a disagreement on billing. The only recourse a company has is to bring it up with the examiners doing their exam in the middle of the exam. This language would create a process in which the carrier could request an administrative hearing within the Department of Commerce to determine if the fees being charged are accurate or in compliance with the law. Ms. Rowan will touch on the other sections of the bill, but I would highlight one more section before I turn it over to her. Section 7 of the bill would require a report to the legislature showing the status of these exams each year. The commissioner touched on this as well. I think it would be helpful for the legislature to see the number of exams opened and closed, as well as how much companies pay for these exams. We feel that that might highlight the need to bring more of these examiners in-house at the department, and we agree with the commissioner's take on that. Thank you again for your attention to this issue, Mr. Chairman. I will turn it over to Ms. Rowan now to discuss other sections of the bill.
Well, thank you, Mr. Cocking, and Ms. Rowan, if you would state your name and who you're with and proceed with your testimony.
Hi, I'm Robin Rowan with the Minnesota Insurance and Financial Services Council, also known as MIFSI. MIFSI members protect the financial security of Minnesotans through the sale of life, annuities, long-term care, disability insurance, supplemental products, and retirement plans. MIFSI members pay out over $42 million each day in life and annuity benefits to Minnesotans. Commissioner Arnold stole my trick of quoting from the NAIC handbook, which I actually have with me at all times. But her description of what market conduct exams are supposed to do was spot on. They are supposed to ensure that companies are complying with existing law. They are not supposed to be venues to impose new public policy initiatives. And unfortunately, with increasing frequency, the DOC is using its broad enforcement authority to impose new requirements on companies and then to penalize companies for violating those new standards, despite the fact that the companies had no way of knowing that the department changed the rules of the game. I mean, I think you have to understand, the market conduct system works really well, and the department has great authority to prevent companies from engaging in bad behavior. They can yank a license, they can impose multi-million-dollar fines, they can issue consent orders. But when you're in that market conduct process, you don't have a lot of opportunity to push back on issues that are new and that you don't agree with. Several sections of the bill are aimed at curtailing this practice. For example, Section 6 says that consent orders and other informal dispositions, if they have compliance provisions in them, those compliance provisions must conform to existing Minnesota law. Another practice is in Section 8, and that prevents the department from imposing civil fines on rates that were approved. Companies file rates and forms with the department. In some cases, those rates are prior approval, meaning the company cannot use them until the department reviews them and stamps them. But currently, the department is holding exams on these rates that have actually been approved. That if the department changes their mind about a rate or circumstances change and the rate is no longer valid, they have the ability to stop the company from using that rate prospectively. but they shouldn't be able to go back and penalize a company for using a rate that they told them that they could use. Another issue with the rates is there's something called file and use rates. And this is intended to increase efficiency in the rate and in the rate regulation area, and so that companies can respond quickly to trends in the marketplace. So those file and use rates are, you file them, and then the department has 120 days to determine whether they want to prevent the rate from being approved. After that 120 days, the law says the rates are approved. And so we feel that once the rates are approved, you should not be able to go back and penalize the company. Again, you can stop it during the 120-day period. You can prevent them from using it prospectively. But companies have to be able to rely on an approval from an department that their rates are valid. Another troubling market conduct practice that we are correcting in Section 3 has to do with NAIC multi-state exams. So there are obviously insurance companies that do business all over the country, but they're regulated by individual states. And lots of times insurance departments will be regulating and doing an exam on the same issue for the same company all over the country, and that's not very efficient. So the NAIC came up with a multi-state process whereby states could collaborate and examine that same company for the same issues at the same time. And the point of those is that they're supposed to replace single market conduct exams. But currently, the Department of Commerce is participating in one of those multi-state exams, while at the same time examining companies at the state level, which means companies are subject to double fines, double exam fees, and it's essentially a double jeopardy situation, which we would like to make sure doesn't happen in the future. We agree in concept, as the commissioner said, but we're not sure about the language on that. In conclusion, we believe Senate File 3287 establishes important guidelines that are common sense within the market conduct process without infringing on the department's ability to enforce existing law. In fact, we often refer to this bill as the Don't Bite Your Brother bill because many of the prohibitions contained in this bill are things you shouldn't have to tell someone not to do, least of all a regulator. I want to thank Chair Dahms for bringing the bill and the Department of Commerce for coming to the table, and we look forward to continuing to work with them. Thank you, and I'm happy to answer any questions.
Well, thank you, Ms. Rowan. Are there any other folks in the audience that would like to testify on this bill? Any other folks? Seeing none, members, we'll open it up for questions. Members, any questions? Senator Howe.
Thank you, Mr. Chair. And, you know, I don't know who this question's to, and it's been a lifetime since I was in the insurance business, at least 40 years. But, and I know that this bill is strictly about insurance companies. But is there anything, you know, to me, I think insurance agents should be protected from some of this also. I know that that's probably a different section of law, but to me, I think some of this should apply to individual agents, as I know that they get investigated also. So I don't know how to maybe look at that, but I would like to entertain that. I don't know if that's a question anybody would like to take, but I do believe that some of these limitations, because I know some agents that have been, to me, unfairly investigated and fined for things that I don't believe they should have been done. So I don't know how that works, but I don't know what it takes to apply some of this same stuff to individual agents.
And I can probably answer for that, Senator Howe. This bill basically focuses on market conduct, which would not be something that would involve the agents, but you are correct on the rules, regulations, et cetera, of agents, and that would probably require a separate bill, but that certainly would be something that could be entertained, yes. Any of you folks want to respond to that, Commissioner, or respond to that?
No, Chair Dahms, you said it beautifully.
Okay. Other questions, members? Yes, Senator Porter.
Thank you, Mr. Chair. Commissioner Arnold, I'm wondering if you can talk a little bit more about the governor's budget proposal and what those 2 additional staff members would mean for this process, for your department. If you could talk a little bit more about that, please.
Commissioner Arnold.
Chair Dahms, Senator Port, thank you for the question. So we have a proposal for 4 new positions. There are 3 positions within the market conduct team. Those positions would specialize in the different lines of business. So more of the work would be done in-house, but we would also get some specialization. We'd also add a senior property and casualty expert in the insurance team. So the way our team, I think it's probably worth it to take just a quick step back. The teams that look at rates, forms, filings, and our financial solvency sit in one unit within the department, and then our enforcement is a different unit. So in order to kind of make there be a little bit more, I spoke to some of the coordination that I've instituted. Adding an additional level of expertise within the insurance team will also help with that coordination and be able to kind of take another level. It's more senior position and can think through some of the policy items that come up, as well as the sort of day-to-day forms and filings work.
Senator Port, follow-up?
Yes, please, Mr. Chair. Thank you, Commissioner Arnold. And I guess just sort of to all of you, I think it's important when both sides that represent an issue can be at the table. And I understand you're still negotiating and working through some of these language things. I agree if you all can get there, that is, obviously what we want to move forward and want to help you have the time to do that work. Are there, I think like as you were talking about, Commissioner Arnold, that $25,000 liability limit is a concern, certainly for me, but interested in, are negotiations ongoing? Do you think you all are going to get to agreed upon language on this bill?
Commissioner Arnold.
Sure, Chair
Could I
Dahms,
interrupt
Senator
you for
Port.
1 second? Senator Port, are you referring to the $25,000 fine? Yes. Okay. Commissioner Arnold.
I believe I saw schedules being traded right before this, so I'm hopeful we can continue working. We've had productive conversations thus far.
Commissioner Port, follow-up?
Oh, Commissioner, did I get upgraded?
Senator Port.
Thank you, Mr. Chair. No, I just, hope that we can allow them to finish their negotiations and make sure that we move forward the bill that everyone is on board with.
Your change in position, pay will not follow. Members, Senator Kent.
Thank you, Mr. Chair. And just to follow up on that conversation, and I really do appreciate the good faith efforts that it seems like everybody is participating in. Mr. Chair, what is going to happen with this bill? Are you considering laying it over so that those?
No, this bill will be moved forward.
And where will it be going?
Civil law.
Okay.
Yep. So there'll be time for these things to get worked out. We've been working on this for some time. And so it goes to finance, I'm sorry. We've been working on this for some time, and so we're gonna continue to move the bill until we can get this stuff worked out. So that's the track that will take. Any other questions, Senator Kent? Commissioner Arnold, Senator Port brought up this $25,000 fine. So in your opinion, what do you think would be fair?
So, Chair Dahms, thanks for the question. I think this would be something that I'd want to go back and look at some of the, maybe some of the data that we have. I think, some larger percent of premium might be okay, or a higher dollar level. I think the larger fines we've instituted have been in the $1 million to $3 million range. So that, something that's larger. And the reason for that is, if I'm an insurance company and I'm making decisions about my practices and I see, this is a fairly regular complaint that I get, is a company will see a market conduct exam happening or a fine or some enforcement action happening, and they'll say, or they'll agree to it and that to the terms, and then they'll say, but I know other companies are doing this and I'm at a disadvantage for agreeing to this. And so if there's not an ability to kind of show that we mean what, the consent order, then we would need to go through every company to get consent orders with every company to make the marketplace fair. And, that's sort of that's what we're looking to keep the marketplace really fair and a $25,000 fine for a company that, has a large premium base and is making decisions about resourcing, based on the finances. That's not going to kind of change the practice, and that's what we're looking for.
Well, thank you, Commissioner Arnold. I have a kind of a follow-up question on that.
Of course.
You say it's not going to change the practice. So I'm hearing that you're saying this is an intentional practice. This $25,000 is strictly on unintentional practices. So do you delineate between the two? Because I'm hearing now we're talking about intentional practice, and I don't think there's anybody at this table or on that table that feels that if somebody is doing something intentionally, that needs to be corrected. But this, as I understand, is unintentional. There's a big difference. So my question back to you again would be, what do you think should happen from an unintentional standpoint? And I understand, and correct me if I'm wrong, but I understand at one point, the number that you were floating around was 10% of the premium, the premium that a company had in any given year. Well, if you have a $2 billion premium company, you'd be looking at an astronomical number of dollars that you would think that they could be fined for something they did unintentionally. I'm not putting words in your mouth. I just want you to clarify to me what your thought process is.
Sure. So thank you for the question, Chair Dames. I think the willful part is where it gets really tricky. So, insurance companies are big places often, and I worked in one, and getting everyone on the same page can sometimes be difficult. I sat in the product area, which meant that I had to make my actuaries agree with our agents, or our captive agents, or our broker team, agree with our direct consumer-facing team, agree with our claims processing team. And so, all of us had to agree on kind of the parameters of the product that we were going to offer, and then that had to be, then instituted by each of the teams. I didn't have visibility into every detail. So, if something had gone wrong in the claims process, I wasn't willfully doing anything. Probably the claims processors weren't willfully doing anything wrong, but the outcome for a consumer could have been a violation of law. And so, I think that the term willful makes it, when you have a large organization and when you have, complex processes, or if you have complex systems that are implementing those processes, it gets to be a little dicey, and that's what we've been working through,
Thank you. Any members, other questions? I do have a couple more questions, Commissioner Arnold. Earlier, Senator Pratt was talking about the governor's budget and how many additional people that would bring. How many people do you have working in the market conduct exam area right now?
Thanks for the question, Chair Dames. We have one examiner, and then we have one support staff.
Thank you. Another question. Back in 2017, when we passed this market conduct regulation, because it seemed like things had gone off in all kinds of different directions and it really needed to be cleaned up. I mean, we had insurance companies getting bills and they had no idea what the bills were for. There wasn't even an explanation of what the bill was for. So we suggested then that there be an administrative process to handle that. Can you tell me what your administrative process is today to handle that?
Thanks for the question, Chair Dames. So we've added some additional detail to the billing. And I think, I've gotten feedback that that's probably not sufficient. So I've directed my chief administrative officer to look at what options we have under state contracting to to build those out. Other states bill companies directly, and so the exam companies, the contractor bills the companies directly. That's another thing that we're looking at as a way to, I think part of the problem is discussing the bill with the person who's doing the exam. That seems to be part of the problem. So we're looking at some options. Adding staff will allow us to pull those billing pieces out of the market conduct team right now and support, so the conversations about billing are not happening with the folks who are running the exam, which seems to be some of the tension. And so, the additional budget will help. We're going to look at different ways that we can, do billing under the state contracting law. And so those are the things. And then we've instituted some changes, but I gather they're not quite enough, and so we'll keep working on them.
So just a follow-up question on that. When we passed this bill back in 2017, I don't remember exactly when the implementation date was. And at that point, you were not the commissioner, and so I understand that there was things done there that you had nothing to do with. But the question I have is, you've been the commissioner now for, I said examiner, I meant commissioner. You've been the commissioner now for a while. And so can you tell me, the bill that we passed, is that being fully followed? Are you insisting at your department that be fully followed? The bill we passed in 2017?
Thanks for the question, Chair Dahms. So yes, the exception is that some of the companies, and through the pandemic, we tried to be really flexible. We negotiated extensions to some of the examinations during that time. I think, we had extensions on a lot of things during the last year and a half. We're now working to kind of tighten that back up. So the 18 months is the one that we haven't always hit, and it's been a kind of strange couple of years, and so we've tried to give flexibility to the industry through that process.
So that's the only thing that you feel now is not being followed according to what that legislation called for? Is that what I'm hearing?
I believe so, but I'm always happy to hear that we're not, and we'll see what we can do to fix it.
Members, any other questions? Senator Howe.
Thank you, Mr. Chair, and I believe that this is true, but I just want to ask the question. These penalties and fines go to the general fund, they do not go to the department, is that correct?
Commissioner Arnold.
Chair Dahms and Senator Howe, yes, that's correct.
Follow up, Senator Howe.
No, I thought that's where it went, I just wanted to confirm.
With that said, members, any other comments or any other questions? Seeing none, just a few final comments on the bill. There are some differences between my bill and what you folks at the Commerce Department would like to see. So my suggestion is that we continue to negotiate on this. This bill will go to Finance next, so my suggestion is we continue to negotiate on this, and some of these things that I think can be resolved, we need to get resolved. And so with that said, let the record reflect that Senator Dahms moves that Senate File 3287 be passed and re-referred to Finance. All those in favor signify by saying aye. Aye. Opposed, nay. Motion carries. Members, this concludes the business on the Committee of Commerce and Consumer Protection, Finance and Policy. So we'll now adjourn.